is Iron Trader, and this is the weekend edition. So today, what we're going to do, we're going to go in depth here, take a look here at crude oil, and at natural gas, and at the ETF for big oil, XLE, and then we're going to look at the gasoline ETF, UGA. Now, once that is all done here, for anybody out here that's like a new trader or just getting starting in this business or just wants to upgrade their game a little bit here, I'm going to post a video here of a guy by the name of Peter Tuchman. He's been on Wall Street, I think, for 38, 40 years now, okay? I think I was watching this guy when I was a kid. He looks like Einstein, but I tell you what, he's really, really sharp, and he's got a good gist on exactly how to trade and how to trade correctly. So I'm going to show that to you. Should be really interesting. This video is for information purposes only, not a recommendation to buy, sell any stock, commodity, ETF. Please like, subscribe. Thanks for watching. All right, now here we have crude oil, here your daily chart. Now this has been running up here very, very nicely, all due to the chaos there going on in the Middle East, okay? So right now, Iran is strategically placing their weapons in different areas here. So we got to see how this is all going to shake out, but it's going to affect oil in one way or the other. So always remember that, okay? So the CIA warned here a couple days back that Iran was going to attack Israel, and all this was going on here. So you have that going on, you have the Red Sea going on, and just a matter of time before you get Saudi Arabia and all these other countries here involved, okay? So this is what you got to be very, very cautious of here when you're trading oil, okay? So what we had here is we had a really nice, good run-up day of 5 days. Friday, this is just an indecision candle because everybody's shaking out waiting for the weekend. Now, I am long crude oil. I stayed long on the crude on UCO here. I got 3,000 shares that I'm staying long, and I'm going to see what's going to happen. I'm not really too worried about anything that comes down. If the price comes down, it's going to be a buying opportunity here, again, to go long. Now, remember, you also have the seasonality coming up here. I say this over and over, but it's true here. You have the Memorial Day and the 4th of July, the summer driving, the Labor Day, and then we have the hurricane season. We don't know what that's all going to shake out, but any kind of disruption is going to be very, very bullish for oil, okay? Now, again, you also have to be very careful here because this is a political year in the United States. So to get elected, you don't want high oil price, high gasoline prices. That is for sure, because basically when you go to a pump and you see $4 or $5 oil, gasoline, I should say, that's basically a tax on people. So they do not want to see that. They want to bring the oil down. But right now, you can't really do anything because they already drained that SPR down about as far as you're going to go now. They've been trying to refill it at 3 million barrels per month, and now they're supposed to up the game here in July of 4.7. But I don't understand why you're going to, fill it up here now at $85 when you could have done it all the way down here, in the $60 range. So that doesn't make a whole lot of sense to me. But again, you also have to so it's kind of like a two-way street here, but I think the war and disruption, anything like that is going to be very, very bad. Good for crude oil, for the long prices, bad for people. Now, also, Ukraine has already, I believe, blown up 3 refiners there in Russia. Okay, so you always say, well, geez, if they don't have the refiners going, what do they need oil for? Well, the problem is going to be if they start targeting these oil facilities and you start blowing those on up here. So that's just going to be a very problem. So oil right now looks very, very bullish to go towards that $100 area here. So, okay, so you're in a very unique time here now. So you just have to stay very, very sharp. Okay, that being said here, let's just look at what we had here for Friday's high. Okay, so you had 87.63. Okay, so when we come over here to this levels here, what do we have here? You had 87.75. So that was your target area. Now, the next level we're going to be going up to here is going to be 88.33, and then we'll have here up 88.57, and then we can target up here at 88.54, and then this is what you're looking for, this 89.85, which is basically your $90 area. Now, again, if you get a big, some kind of a really big disruption going on, it'll blow past this like nothing. So always watch that area. And then we can come to the left of the chart right here. Okay, so your next level here is you have 90.27 going on here. And then we can come up here. You have 91.33. You have 91.88. And this is the candle that you want to look at here. This is that 92.43, and then we'll come and we can target this area at 93.10, 94.17, and that's what we're looking for, that 95.03, if it blasts right on up here and you have a big disruption. Now I'm pointing out this nice bottom here with a series of lower highs and higher higher lows and higher highs. That's always very bullish. Now look at your 50 SMA. You're about ready to cross over your 200-day, your 21 days on the upside, your 8 days on the upside. This is a very bullish chart here. So just look to the left of the chart here. So if does this blast up, you can look at the intermediate resistance levels, but realistically, you're looking at the top there, that 89.85, let's just call it $90. And then we're looking for that 92.43 and then 95.03. Okay, so that's what we're going to be looking for there on the upside. On the downside here, we want to follow the candles down. So always look at the previous day's highs, lows. When the futures open here at 6 p.m. on Sunday night, you want to watch this high of 87.63, that low at 86.32, and that closing at 86.73. It's going to be very key. Now, again, if that's lost, we can come over here. That's 86.20 level here. We have 85.50. We looked at the bottom of that candle at 84.64. And then this is the big target that we're looking for, is that 84.35 on that 8 SMA. Now you can see how well that 8 SMA is holding. If it doesn't, the 21-day is picking it up very nicely. Now you always want to watch this candle here. This is that 83.21. This is the breakout here, 83.12. So it ran up to 83.12, came on down, and then made a high at 83.1. But you look at where it closed at 83.11. However, when you look at this candle, see how nice and square that candle is? It's not a topping tail candle like we had here or we have here. So that always, when you get a candle like that, that tells you that you got to go just stay long if you're in a long position, or get long, because you're going to have a run right on up, especially when it exceeds the previous resistant level. So that's going to be very key. Again, if that's lost here, we can follow these candles here. So what you have is you have 82.48, we have 82.36, and then we can look here to the bottom of this candle here. This is 81.52, but right there is what your target is that 81.89. That's going to be very key, because you can see how many times that is held here very nicely. Now again, if that's lost, you have your 200-day and we have your 50-day right underneath that, and your price channel here at 76.79. Now these price channels are very useful. You can see here how what they do is they just take, okay, so when you put the top in, that brings that right on across. Okay, so it shows you very clearly your resistance levels and your support levels. So if it comes all the way down here, we just look at that. Well, basically that's just the bottom of that candle. It's what it is. Now these are simple moving averages, and so this is like the green is your 50 simple moving average. Maybe basically it's your average over a 50-day period. The red is over your 200-day period. The yellow is 21 SMA, and your blue one here is over an 8 SMA, and your purple is over 100 SMA here. Okay, so always want to put it on, but just keep your charts real nice and simple. Like we have you just use a volume. RSI is always very good. It shows your relative strength. Now you can see here we're over that 70 level, but again, so it looks like it's overbought. Yes and no, because that can stay overbought for a long period of time. Basically, it's just showing how much strength that's going on there as in the crude oil business right now. Okay, your MACD, your green is above your red. That shows very bullish and positive momentum to the upside. When it comes down below, that's momentum down to the downside, and then this is the result that you get here. So right now, very bullish, so that when the futures open, just watch the top of this candle. That's at 87.63. If that's taken out, then obviously we go higher, and your big target here is going to be this $90 area. On the downside, watch the low. That's at 86.32. If that's taken out, we follow the candles down, but really what we're looking for here is this 84.35, or even a possible here, this low of 84.64, which you can basically put a double bottom situation and then go higher. Okay, so realistically, this chart right here is any kind of a pullback is a buying opportunity, till we get, I should say, a candle like what we have here, which is a big red candle, and then she just reversed down. But right now, very bullish here on your daily chart. Okay, let's take a look here at a nice weekly chart. Okay, here we have your weekly chart. Now you can see the big picture. Okay, so you ever always want to put a weekly and you can put a monthly on here also here, but we're going to look at here at the weekly. So you can see where this actually went up here. This was the 2022 era, and it spiked all the way up to 130.50. Okay, so that is a big, big target. Now, when we look at your MACD, that's your green is above your red, very, very bullish, and look at your RSI, you have plenty of room here to run all the way on up here. Okay, so very, very nice here on the situation going. Okay, so let's take a look here at that chart. Okay, so when we look at this weekly chart here, you can see here this 200 SMA. Okay, look how nice this is held all this way. Now, yes, you can spike below, but for the week, you always want to close up. See how everything closed right above. Look how strong that is. So once you start getting an area like this where this comes down, you say, oh, it's holding this area here. Then you know that once you start getting 1, 2, 3 down, these are all weeks. Okay, that shows you that you can do a really good scalping opportunity because here is your bottom, your target. Okay, so that's all that means. It's very, very nice. Now, when we look at this 8 SMA, look how nice it came up. It was coming all the way down, but it never crossed that 200, and now she's running up very nicely. Now, let me just big this up a little bit for you. See, so when you look at this 21 day, see how nice that is curling up here? Your 8 day is up. This is just a very, very bullish chart. And one thing I really like about it is now it took a little time. See that candle ran right into your 100 SMA here. Went right in there, couldn't do it. But your next candle was that big box again, showed you that, hey, this has got potential to get long. And now we held that key 100 SMA. So now that becomes that 82, 87, very, very good support levels here. Okay, so now when you look at the weekly, you just want to basically just come right on over to all the targets. Okay, so when you look at this, you have 87, 83. So your high actually for last week was 87.63, so you came within 20 cents of that target. Okay, so that's what I'm trying to show you here. That it's not going to exactly go right to the target within a penny or two. Well, sometimes it does, but that's the target that you're shooting for. Okay, and then right above that we have 88.29, and then this is the target we're looking for. That's at 89.85, and then we can just start working ourselves here. You have that 91.88. You have 92.43, and then this is the bad boy right here, that 95.03. That's the big target. Now, again, if this happens to rally up, and you look at this RSI here, you have plenty of room here to run, plenty of room on your MACD compared to look at this MACD up here. See, you can look at, your RSI up there. So, your MACD up here. See, you can go all the way up here to your next level. So, if you break out of this 95.03, say this, you have some kind of a total chaos and it goes above here, then what you want to do is just look right to the left of these charts here. Okay, so what we have is you want to look to the top of that candle. So what do you have there? You got 97.66. That's going to be your next target. Then we'll bring this level right over here, and you have 101.88. Okay, that's going to be the next target, and then we can come up here. You got 105. Okay, 105.05, and then we have 111.45, and then this is the target that you'd be looking for is that 114.05. So if you put the price channels here on your charts, you can see where the notches are. As it goes down, it makes just a reverse here on your the other side. So you just bring that right across, and when you come over here, okay, you have 114.05. And then we can just follow the candles up, but you really want to look at this target here, which is 123.68, and then we can come all the way up here to this 130.50 if crude just starts getting ripped. Now, I'm not saying that's where it's going to go. We'll see if this all gets settled. I'm just trying to show you here that if you break out here, then look at all the nice levels that you have as target zones to go right on up here. So you say, oh, 130, they're going to go up there. It might not, but it very possibly could. Depends on how much disruption that you have. If those oil wells in Russia are being taken out, along with them OPEC cuts. OPEC, remember, they had their meeting last week and they maintained all the cuts. And the key to those cuts is when you really read the report here, I dug into the report on, just go to oilprice.com, it's not right on there, their compliance. The compliance is right off the chart. Everybody is complying with this because they're saying, wait a minute here, why should we sell a barrel of oil for $60 when we can sell it for $85? Okay, big difference, especially when you're doing volume. Okay, so everybody is in compliance on this situation here as far as the oil. So really, well, next I say what level we're looking for here is going to be that top. That's at 89.85, say $90, and then we're looking at that $95, and then we're going to be looking at that $100 level, and then you could ratchet all the way up to that 114 level, and then maybe up here to 123.24 level, and then all the way to 130. But we got to see how this all shake out. But this is very, very bullish chart. On the downside, you basically just want to watch this key 100 SMA. As long as that 82, 87 holds, very, very bullish, and it'll give you a chance for this 8 SMA here to catch up. Okay, so eventually you can see where the 8 went over your 21, went over your 50, and now she's headed for the Hondo up there. So as that rolls on up here, that's very, very bullish here for the crude oil. Okay, now let's take a look here at natural gas. Okay, here we have the natural gas. Now, natural gas is always one of my favorite trades here for the simple reason it's like crude oil. It's pretty much always in play. Now, again, natural gas is a little bit out of the seasonality right now, but it should be coming into it. Okay, so it needs a catalyst. That's the thing about natural gas. But the thing about it is it moves all the time. That's what I like about natural gas. It has big, big movements. And you know what I'm saying? So right now, this is a trader's market. This has been a trader's market here for a long, long time. Okay, so don't be afraid to go long and don't be afraid to go short. Now, what I use here on the long is I've been scalping is UNG. You can also do Boyle, but I like UNG just a little bit better right now until we can start breaking above these resistant levels. And on the downside, you can use KOLD. That's always a very good there where you can say I can short this. That's got a big price and it's got big movement there. Usually you can get anywhere from 5 to 10 points on that a day very, very easily. Even though with a couple scalps, I think last week I got like that one day like 7 points out of it just with 2 scalps. So that's very good. I'm only trading like 500 shares, but you know, if you take 7 points like that, well, that's a nice easy $3,500 just on one commodity. Okay, but I'm also trading natural gas and technology and everything else, so that makes a really good day, and at the end of the week, a very good week. Now, let's just take a look here at this chart. Okay, so what we want to look at here is right here. What did we close at? Okay, so you closed here at 1.785, and your 8 SMA here is 1.79. So now realistically you are below this key 8 simple moving average. So now that becomes resistance. So this is what we're going to look at on the upside. Okay, so we want that right here. We want this key level here, 1.794. That is very, very key. And then this 50-day. Now, this 50 SMA here is sitting at 1.839. Now, when those futures open on Sunday night, it's not going to be sitting there. This 50-day will be coming down, and it looks like your 8 days is going to be moving up, and they're probably going to be crashing here pretty quick. So we got to see what's going to happen here with the price. But last week, you noticed that you went right up into the 50-day, couldn't do it. Into the 50-day, got above it, but he couldn't close it, and he put a topping tail in. The next day, we had a red candle, but it held that key 21 SMA, which is very, very crucial. And then on Friday, we had an indecision candle. It's not running long with the crude oil, okay, situation here. So on the upside, very key levels that we want to watch is this 1.794 and this 50 SMA here at 1.839. If you can get above that, then we look at this nice price channel at 1.955, okay? And then we can go 1.98, but this is the candle you're going to be looking for is this 2.0. That's what you're going to be looking for. Again, if you can rally above that, then we have a lot of levels. You have 2.04, we have a 210, 212. This is the candle you're going to be looking for is 2.168. Now, this looks very tight and very, very sloppy kind of a situation. Oh, it's not really going anywhere. Eventually, it's going to bust through that, and always watch the top of this candle, 2.168. And that's your gap. And then look at the bottom here of this candle at 2.42. Now, there is resistance here in the middle here. You have 2.31 here. You have 2.332 here. But that's a candle. When you always have a gap in the fill, that's usually like a magnet to a refrigerator. It's going to get there. It's just going to be a little patient. Now, watch here on Monday, this key level, this 1.79, and watch that 50 SMA at 1.83. Once you can bust above that, then we can start hitting these price channels here very, very now. These price channels are not resistant levels. All they are just tell you where this is a target where it's going to go. Okay, your simple moving averages and your candlesticks, those are your resistance. This is just showing the top of your candle here. But again, you got to bust above that 50-day, then we can run up higher. Now on the downside, it's got to hold this 1.744, and on the weekly chart, I'm going to show you that in a little bit here. It's got to hold that 1.71. If that is lost, then we'll come right to the bottom there. That's at 1.70, 1.686. There's your gap. And then the top of this candle here at 1.675, that's your fill. Okay, so this was that contract roll, that gap in that fill, came on down. Now your gap is lower. Okay, but again, if that's lost, 1.64 and then 1.58 is your target zone here. But right now, this chart doesn't look like it's really much, but if you can get above that 50-day, then she can rip. Okay, your RSI here is looking good. Your MACD here, your green above your red, that's still looking good. The key to natty gas here is just have some patience, because remember, when this moves, look what happened here. Okay, so you had this red candle, your high was 2.56, and she rocketed right up there to 3.39 very, very quickly. Okay, so just remember how fast that this can move, but you got to watch everything that you can to help you out. See, when you made a high here of 3.39, and then we come here at 3.37, see, that's a double top situation. That tells you got to get the hell out of your trade or start shorting it to come on way on down here. So always watch for any kind of a patterns in that kind of a scenario. Same way we here, you had a low of 1.52, rallied up, came down, but only put in a 1.58. That's a double bottom situation going, and then she rallied up nice here. Okay, so always look at the patterns, but just look at that 50-day. That's going to be very, very key. Now, let's take a look here on the weekly. Okay, so here's the weekly chart. Now, this tells you how much this natty gas can giddy up and go. Okay, so look how the fast this thing ran here. So you look at the low of this was 5.32, and you doubled it, basically double it all the way to a 10 mark here. So look how fast that thing can roll when she moves. Okay, so what you need is that disruption. Okay, so you're coming into this time of the year. See this April right here, this area here, you're coming into this time of the year where you're going to get, but just remember, natural gas, they don't call this the widowmaker for nothing. You're going to have this chop city. So if you can't handle it, then just go trade crude oil or go trade something else. But this is what you get with natural gas. It's wet and wild. Okay, I used to know a girl like that. Anyway, here we go. Here what we want to do is you want to hold this key 8 SMA here. This is very, very crucial. 1.71. If that is lost here, you can come all the way down to this 1.52. Now, again, see this here, this candle here, this was not last week's, but the week before. This was the reversal candle. You had 3 reds, and then we had a reversal, and then this week's candle, we had a higher high and higher low. That's always very, very positive here, okay? So never have a thing where, oh, geez, natural gas. Always be patient with natural gas. Let the trade come to you. A lot of times, I tell you, what is your friend is the pre-market. A lot of times when you see that natural gas coming down, that's your time you can say, okay, if it can hold that support, I can buy this in pre-market, and I can dump this out in the regular time market, or I can dump this back out in pre-market if it runs out here. So always have that pre-market is your friend. Same way with a lot of times with the aftermarket is your friend too, but the pre-market really gets the day going, especially when something comes down like that. You say, okay, this is if it holds that support level, that's my buying opportunity here to take that higher. But you can see here where you have this level, you're sitting at 1.78, but you got a target all the way up there at 10.0. Not saying it's going to get there, but I'm saying there's always the possibility you get disruption in natural gas, and this thing will rip much higher. Okay, so always remember that. All right, let's take a look here at the big oil ETF XLE. Okay, this is my favorite here for the big oil. Okay, XLE. First of all, it pays a 3% dividend. Okay, so if you're holding it, no big deal. I always buy this here right after the first of the year, and I hold it, and I take it into seasonality trade for me. Okay, I don't really trade this per se. I just buy it and hold it because it's going to go up, and I collect a 3% dividend. Okay, but this has all the big boys, and I've showed you this many times. It's got your Exxon, your Chevron, your Mobil, Schlumberger, the whole 9 yards is in here. And you have the dividend, and you have a good chance of this thing going much higher, especially as the seasonality. Now, when we look at this chart, see we had a high, lower high, lower high. That's never good. Okay, then you have a series of lower lows until we get here to this red candle. See this? This is a bottoming candle. So when you see that, that's what I do is I wait the next day. If we can get above that, that's when I take my long. Okay, so that's what I'm long in here from. I think it's like 80 flat, so something like that. I gotta have to relook. But I'm just long because I'm running into this here. I'm looking for that $100 area. So anytime you have any kind of a disruption going on here, this is going to be a really good trade. So when we look here, you have a left shoulder, we have this right shoulder, and then we have right shoulder here, and then we have your head, left head, and then right shoulder. Look how nice that pattern played out. And then once she breaks above the top of that candle at that 87.11, then she's gone. And now look how nice it's following that 8 simple moving average here all the way on up. See this? Look at this, holding it all the way on up. So yeah, it came down and you tested it, but look how nice you've held it here all the way on up. So that always tells you that's extremely, extremely bullish, okay? So now what we're doing is we're looking to a scenario here where, look at this RSI. Now, there's no divergence here, but you're just getting like into an overbought condition. Your MACD here, very, very bullish. So it's going to be a matter of time before this pulls off. Usually you have a round number at 98.47. You have a round number 100, I say, is sitting at 98.47. So those round numbers, you never want to say, oh, I'm going to wait for it to get to $100. No. You want to dump that there at, say, 99.80 or 99.50 or something like that, because it never really gets to that round number. If it does, it'll just spike through there. But a lot of times it'll get to it, but just not quite. So I'm looking for that $100 area on this. And then if you get a pullback, a lot of times the next time it can blast through that $100 area, okay? Very, very easy. So that's what you got to be very, very cautious of here. But look how nice this chart is. It's rolling all the way up. So if you want to trade the big oil, okay, this is an easy way to trade the XLE. It has a nice basket of all the big oil. So I'll say one oil company, two oil companies, they don't do so good. It doesn't matter. It's a nice, good basket of the whole schmear. Okay, let's take a look here on a weekly. Okay, now this is the XLE on a weekly. Okay, now if you look at this, this is over a 10-year period. Okay, so this has got all the way up to that 101.52. So this is what you're approaching right now. Now again, don't wait to get all the way. Oh, I got to have one thing. It doesn't matter if you sell that high. Okay, it doesn't matter if you buy the low. Okay, all that matters is you get that meat in the middle and you take your profits. And then with this one, you also have the profits plus the dividend. Okay, so now when we're coming up to these levels here, so you got to go back all the way down to 14 here, 2014, to come up to this 101.52. So this is what you're looking. I'm looking for the $100 area because usually round numbers are the key. But I'll be selling this here before that, and then and then I can see what kind of strength it has to maybe rebuy it. But I just want to show you here this level of how this got all the way here. Went all the way down. This was that whole COVID era, you know what I'm saying? Oh, nobody's driving, nobody needs oil. Well, eventually that goes away. People are not going to just sit in their house, forever. They'd rather go on and say, hell, I'd rather die than just sit here. You know what I'm saying? So always, this is buying opportunity stuff, okay? Especially like this. It came down, made a higher low. That's buying opportunity stuff, okay? That's what you always have to remember here. But this is also a very good seasonality play if you buy it after the first of the year and just run it right up into summer driving. Now, this is running up very high because you got total chaos going on here. But again, watch this 101.52. I'm watching the $100 area first. But this is to be the retest, okay? So a lot of times what you look at this is this could double top and then it could come flying right on down here. So always watch that area here. So you can, when you have these charts here, you can put on anything that you want here for how many years that you want. But you can see how nice this chart was trading. And then once you broke out of this high, okay, you had that 93.31. We had 94.71. And then we had 92.70, or what is it? Had 93.69. So you had a nice triple top kind of a situation going. Came down here, but you notice that you're holding this level right here. That was key because you put in a higher high, a higher low, and then she just rallied right on up. So I'm looking for that $100 area, and we'll have to see. But look at your RSI here. You're starting to get into that overbought condition here. Now, again, see, this is when I talk about RSI overbought condition. See, you can stay there for a while. That's not really a problem. You can stay there for a while, just like we can here. But we got to see how this all shakes out. But this is going to be a little bit different here because you have a lot of political unrest going on here in both directions. Okay, let's check out the gasoline ETF, UGA. Okay, here we have the gasoline UG. Now, first thing I just want to warn you on here, look at volume. It doesn't do much volume. Okay, I want to point that out. So you can't go in there and say, I'm buying 50,000 shares. I'm doing this. So you got to keep your track on the volume. Okay. So what I do is I buy it like in increments. Okay. I'll buy, say 2,500 shares, and then I'll buy another 25, stuff like that. And then when I sell it, I do just the opposite of that. That way you can get in easy and out. And a lot of times with that low volume like that, if you say, I'm going to dump, 15,000 times, you might not be able to get out of it. Also, it also tells everybody, hey, wait a minute, why is all of a sudden somebody dumping this stock here? So always watch that here. So just play the game, okay? Yeah, easy in, easy out kind of a situation, okay? So I always buy this after the first of the year here. Okay, this, I didn't buy it right there. I bought it right in this level here. I'm at 60 flat out the door. Okay, so I just hold this after the first of the year and run it right up into the Memorial Day situation. Now, what we have going on here, you had a high here of 73.47. Okay, so what do we have your target? Well, there's a couple targets here. Okay, so right here we have your high of 73.77. Just above that, we have this target at 75.43, and then we have 76.08. That is your big target. Okay, so you just want to run it. I just run it right on up here, into that thing. I don't care if I sell the top. I don't care if I buy the bottom. I'm just looking for that meat in the middle, because this gasoline ETF is almost like a side hustle. Okay, my main business there is crude and natural gas, and this is just like a little side hustle there that you buy it, just like the XLE. You buy it and you go long, you ride it out for a certain amount of time, and then you dump it, and then you do the same thing over. It's the same with Apple stock. Okay, for me, Apple, I trade Apple 4 times a year. What I do is I buy it 2-3 weeks before earnings. Hopefully it sells off. And then I trade it right into earnings and I dump it. Okay, same thing every year, 4 times a year. That's how I do it. I do that on a lot of stocks. So it's like a little side hustle. The trading is how I look at this. Okay, so again, this is running up here real nice. And I'd be just looking here. If you are in this, just look for these upside targets going on here. And that's your big boy up there at 76.08. Now, again, this does not trade big volume, but again, it's an easy way to trade yo gasoline. All right, let's take a look here on a weekly. Okay, so when you look at this gasoline ETF here, you can just see here, okay, see the volume, everything is pretty light overall there. Because you got to figure that volume right there for a weekly basis here. But you do have a lot of good targets. So if it surpasses that 76.08, you do have a target there of 80.29. Okay, so this is basically how you just want to, just like here, I just ride it up there and then sell it into that. So if you're interested in saying, hey, I want to trade gasoline, but I don't want to do it right basically every day, just after the first year, get into it. When it comes around Memorial Day, 4th of July, see how it's trading. Boom, you can dump it off right into it, okay? So it's just the same trade every year. This just gives you a big, broader picture. This is over a 10-year period, this chart is here, where this actually got all the way down to here, during the COVID times of, a little over $8, okay? But for me, that was a good buying opportunity because I figure eventually this COVID is going to be behind you. You're going to go out, you're going to be driving. That's a good time to get into the old gasoline and just buy and hold it. This is really not a trader because it doesn't do that volume there where you can really trade it kind of a situation. It's just like a buy and hold, a little side hustle kind of a situation. Okay, so now what we're going to do is I'm going to show you a video for it. So any of you new traders that are out there listening on the site here, I'm going to show you a little video here of a guy. He looks like Einstein, okay, but he's been on Wall Street there, I think 38, 40 years. I've been watching him here. God, I think I was a little kid when I was watching this guy. But he's really good. Old Peter here, okay? So old Einstein. So I want you to just listen to the video. I'm going to play it here for you. And if you're a new trader, this is a really good way to get into trading where you're not going to lose money. If you do, it'll be a very, very small amount, okay? So enjoy.
Announcement. Peter Tuchman will be in the world for traders. Peter, are you excited to come out?
I am
this
so excited.
Others should know. And then I was wondering if I could give you a few of the rules that I follow and it will get you to critique them.
Okay, good. Yeah, go for it.
So what would you say the 5 rules of day trading are?
Successful day trading.
So with your over 30 years of experience on the New York Stock Exchange, what would be the top tips that you could give for successful day trading?
Okay, so first of all, as a broker on the floor of the stock exchange, what I do for my business, which is trading the S&P 500, even though it is considered day trading, it's not what I teach retail people about day trading. It's a different thing. So let's separate that. So it's not from 30 years experience, because for most of my career, I didn't day trade. I was representing house brokerage firms, Cowan and Company. Convertible management is what I need to convey to you guys, because that's where you're going to see value. So at the end of the day, the rules are simple, and they're just like this. Have a plan on how much money you want to make in a day. And when you reach your goal, turn the machine off and go home. The only thing where you can't get back is time, right? Time is the most valuable commodity in the world, right? So think about that. If I'm a 100-share trader, I should be making $100 a day. If I'm a 1,000-share trader, I should make $1,000 a day. That's my goal. When I hit my goal, I turn the machine off, go home, go hang out with the kids, go to the beach, drink a Coca Loco, whatever the F you want to do. Okay? Secondly, have a stop order on every trade you do, and never change your stop order midstream. If I buy 100 shares at $50, I put in a stop order at 49.5. You have a target amount of money. When you hit it, turn the machine off. Every order you enter, you have a stop order. What does that mean? I buy 100 shares at 50. I put in a stop order at 49.5, down 1% of the stock. Okay? If the stock goes to 50.5, first of all, if the stock goes to 49.5, I get stopped out. I never change my stop order. I'm out of the trade. I lost $50. Gesundheit, hate, it's a beautiful thing. If it goes to 50.5, I immediately take a profit, because trading with a profit, with a little money in the bank, is the greatest sense of confidence you can have. So let's say I bought 100 shares, I sell 50 shares, 50% of my trade, up a half a dollar. Okay, and I moved my stop order from 49.5 to 50, break even. So now I just made $50, and I now cannot lose money on the trade. That is the greatest way to learn and to trade, knowing that I just put a couple of dollars in the bank, and now
the charts, the charisma is infectious.
Okay, that was Peter Tuchman. Okay, so old Einstein there. So I hope you got something out of that. If you're a new kind of a trader, okay, that's very, very good advice. You take a small loss, and then as the price goes up, okay, what you do is you take a profit, and then you raise your stop up, okay, so you never lose money on the trade, okay? And the worst thing you can do here is say, hey, I'm going to take that money, and then what I'm going to do is I'm going to see if I can make more money, and then at the end of the day there, you end up losing money. So just take what you say I got to do. If you trade 50 shares, or you trade 100 shares, or you trade 1,000 shares, okay, take your money and then keep raising your stop up, just like what he said. So listen to that a couple times there to get the whole gist of what he's saying. For any new traders out there, it's really, really good advice there. And it's an easy way to keep your account always, always liquid. Okay, that's what I got for you today. We have a little energy play. We have a little action here from old Peter. And so I hope you guys enjoyed it. All right, thanks for watching.